Hey everyone, welcome back to Corporate Decoder, the place where we find out if it's time to buy, sell, or hold on for dear life based on dense financial reports. This is Profusa Inc. and today we are decoding their latest SEC filing, the kind of report that tells you exactly where a company stands financially and what its future might look like. The first thing to note is that this is a preliminary prospectus. It's not the final picture, but it gives us a really good look at what the company is planning, especially regarding the sale of shares by a selling stockholder. This offering is about the resale of a massive number of shares, up to 22222 million of them. These shares come from a convertible note worth $22 million, which is a significant chunk of capital. On February 11, 2025, Profusa entered into an agreement to sell these convertible notes. The idea is that a buyer called Accession Partners Fund LLC would purchase these notes, which can later be turned into company stock. There are different tranches or parts to this deal with specific conditions for each to be purchased. They've been amending these deals recently. On August 25, 2025. There's a new structure with 4 tranches of notes. The first one for $10 million was already done. Others are waiting on conditions like this registration statement becoming effective and the company not having any listing problems on NASDAQ. Around the same time, they also amended the terms of the original note, specifically how the conversion price is calculated. The new rule says it will be the lower of a set price, or 95% of the average stock price over 10 days before conversion, but there's a floor price too to protect from extreme drops. As of August 28, 2025, Profusa has about 36 million shares outstanding, but if all these resale shares are converted and sold, that number jumps to over 258 million shares. That's a huge increase, and we need to watch for dilution. The filing doesn't shy away from the danger. You should know investing here is risky and you could lose everything. This is a standard warning, but given the company's situation, it's even more critical. This is a big red flag. The company itself says there's serious doubt about whether it can keep operating. This often means they're burning through cash fast and might need more funding to survive. It harks back to the uncertainty of future financing. It's not a new problem. Profusa has been losing money since it started and expects that to continue for years. So turning a profit is a long road ahead. The company is essentially betting on future growth to fix past losses. They're not alone in this space. They face big established companies with lots of money, which makes it tough to stand out and compete effectively. This is crucial for any medical device. The FDA's approval is a must before selling in the US. And failure to get it means they can't grow their business, especially for their glucose monitoring system. In fact, they admit their Lumi oxygen platform is expected to bring in almost all their revenue until new products are approved. Well, this is unexpected. Profusa is also involved in Bitcoin. This is a huge risk, according to their own filing. Bitcoin is super volatile, prices can swing wildly, and this creates a lot of uncertainty for their financial results and stock price. Unlike traditional assets, Bitcoin doesn't generate income over time unless they sell it or find a way to create income streams with it, which they admit might be difficult. This Bitcoin strategy is new, and their old financial reports don't fully capture its impact, which adds another layer of uncertainty. They plan to pour a lot of money into Bitcoin, meaning it will likely make up a majority of their assets. This lack of diversification makes any price drop hit them much harder. Looking at the pro forma balance sheet as of June 30, 2025, the company is far from stable. They have about $8.5 million in cash, but over $29 million in current liabilities. This means they owe more than they have readily available. This line item is massive at over $13 million on the pro forma combined balance sheet. It's important because this is debt that can be converted into stock, and when it is, it increases the number of total shares outstanding, meaning more dilution for existing shareholders. The pro forma statement of operations for the 6 months ended June 30, 2025 shows a net loss of over $17 million. This is after combining the numbers and adjusting for the business deal. This highlights how much cash they are burning through. This is the real loss for the owners of the company, a staggering $27 million for just 6 months, which translates to a loss per share of 40 cents. That's a lot of ground to make up. Let's talk about the leadership. Ben Huang, the CEO, carries a lot of weight. He's been with the company since 2012, and his experience, especially from companies like Life Technologies, is key. Fred Nechtel recently joined as CFO, bringing finance experience from various companies, Rajesh Asar-Potar and Jack Stovall, also bring significant industry experience to the board. Ben Huang has been the CEO since 2012. His long tenure and expertise in life sciences make him a central figure in Profusa S strategy. Fred Knechtel joined in July 2025, bringing a wealth of financial experience from companies like Dianyar Biosciences and Interpace Biosciences. His background is crucial for navigating the company's complex financial situation. The company has a solid patent portfolio with over 20 issued US patents and 80 international ones expiring between 2030 and 2040. This intellectual property is a major asset, protecting their technology from competitors, especially for their sensor technology. Profusa has received grants from the NIH and DARPA totaling about $100,000 in 2024. This shows some level of government validation for their research. Like many global companies, Profusa has to deal with complex international trade laws which could impact their ability to sell products in different countries. A significant legal risk is the possibility of being classified as an investment company under the 1940 Act, especially if their Bitcoin holdings become a large part of their assets. This would bring heavy regulations and could hurt their business. Staying listed on Nasdaq is a challenge. If they fail to meet the standards, their stock could be delisted, which would severely impact liquidity and investor confidence. If current shareholders decide to sell a lot of their stock, especially these newly registered ones, it could drive the stock price down significantly. This is a constant risk. Companies can issue more stock to raise capital, but it means each existing share becomes worth proportionally less. They also might issue more shares for things like acquisitions, which could water down ownership further. Don't expect any dividends anytime soon. Profusa plans to reinvest all profits back into the business to fund growth and development. This means returns for investors will primarily come from stock price appreciation. They have a structured approach to risk management with board committees overseeing different areas like audit, compensation and nominations, ensuring a level of corporate governance. Now, for my take, Profusa is in a tough spot. They have innovative technology in a growing market like bio-integrated sensors, especially for diabetes and wound care. The patents are impressive and the potential for their data platform is clear, but the company is bleeding cash, has substantial doubt about continuing as a going concern, and faces fierce competition. Plus this sudden dive into Bitcoin adds a massive layer of volatility and risk that's hard to ignore. The leadership has experience, but navigating these financial and regulatory hurdles, especially after the merger and with the Bitcoin strategy, is a monumental task. They need to execute flawlessly on product commercialization and secure consistent funding just to stay afloat. The dilution risk is also very real, especially with the resale of so many shares. The market is tough and the company's financial health is precarious. This is a high risk, high reward scenario, and investors need to be aware of the extreme downside potential. So what's the verdict? Profusa is a company with a promising future hinged on overcoming significant near-term challenges. The financials show a deep hole and the risks are clearly spelled out. The Bitcoin bet is particularly concerning. Given all this, I'd say proceed with extreme caution. Alright, that's our deep dive into Profusa's latest SEC filing. What are your thoughts on their business strategy and especially this Bitcoin venture? Let us know in the comments below. If you found this breakdown valuable, hit that like button and subscribe for more corporate deconstructions. Don't forget to check out our Discord community linked in the description for more exclusive content. Thanks for watching and we will see you in the next one.